Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified illiterate analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an Forex analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the German Final Services PMI in Europe. This financial news came on June 3rd at 7:55 a.m. UTC time. The currency pair we're going to focus is the Euro USD currency pair. Next one is the unemployment rate in Canada, and the date and time was June 5, 12:30 p.m. So let's start with the first one. German Final Services PMI in Europe. Now, what is German Final Services PMI in Europe? German Final Services PMI measures business activity and economic conditions in Germany's services sector, including finance, transportation, communications, and hospitality. It is a key indicator of economic performance as the services sector represents a large part of Germany's economy. A reading above expectations suggests stronger business activity and growth, supporting the euro and pushing euro USD higher. A weaker than expected reading indicates slowing services activity and softer economic momentum, which can weigh on the euro and lead to downside movement in euro dollar currency pair. Now the event details. German Final Services PMI in Europe. The date and time June 3rd, 7:55 a.m. UTC time. The previous reading was 47.8, forecast also 47.8. The actual number we got is 48.1. The currency pair we're going to focus is the Euro USD currency pair. Now let me discuss about market context and pre-release expectations. Germany's final services PMI was expected to remain unchanged at 47.8, matching the previous reading. A reading below 50 indicates contraction in the services sector. Therefore, expectations suggest that Germany's services activity remained weak and economic growth under pressure. Markets were watching closely for confirmation of continued contraction or signs of recovery in the services sector. A reading above 47 48.8 would normally be interpreted as a positive surprise and support the euro. A reading below expectations would reinforce economic concerns and weigh on the euro. If we go over to a price chart of euro dollar currency pair, this is where we got the news. Despite the stronger than expected PMI reading of 48.1, the euro USD actually moved down. And after the Forex news release, uh, people were expecting a euro to actually go up, but instead of that, we got the drop. So this showed a divergence between the economic data and the price action, where positive euro data did not translate into euro strength. The market instead reacting the market instead reacted with selling pressure on euro USD currency pair. Now, why euro USD moved down? Euro USD declined after the release due to US dollar strength dominating market flow during the session. Forex market participants focusing on broader eurozone growth despite uh, concerns of a headline beat. Profit taking on early euro USD long positions, weak underlying euro sentiment despite slightly better PMI reading. Interest rate differential expectations still favoring United States dollar and broader risk sentiment shifting towards United States dollar demand. The key market drivers observed: the PMI beat expectations, the expectation or the forecast was 47.8 and the actual number we got is 48.1. The services sector still remained in contraction territory, meaning it's still below the 50 level. However, euro failed to gain meaningful strength. US dollar demand dominated price action. Forex market ignored marginal positive surprise. Euro USD trend structure remained bearish. Broader macro flows outweighed economic data. The technical and sentiment considerations. Euro dollar showed bearish momentum even after a better than expected PMI release. This suggested sellers remained in control of the currency market. Buyers failed to sustain momentum above key levels. Market sentiment remained biased towards US dollar strength. The PMI beat was not strong enough to shift trend direction. This highlights an important Forex principle. A better than expected result does not always mean currency strength if the broader trend is dominant. As far as the trading outlook is concerned, the short term bias is bearish in euro dollar currency pair. It's possible we might get a bounce back up from this support area, which I will discuss later. Continued US dollar strength and Eurozone economic weakness may keep Euro USD under pressure, even though the PMI improved, the reading still remains below 50, meaning the services sector is still contracting. Forex traders should monitor ECB policy expectation, US inflation yield direction, and overall risk sentiment for continuation signals. Overall analysis is the Germany's final services PMI rose to 48.1, beating expectations, but still remaining in contraction territory. While this was technically positive economic news, it was not strong enough to shift broader market sentiment. Euro USD moved lower after the release, driven by US dollar strength and broader macro flows, overriding the mild positive surprise. This shows that forex markets do not react only to whether data is better or worse than forecast, but also to the strength of the deviation and overall trend context. Final key takeaway is the previous reading was 47.8, forecast 47.8, and the actual number we got is 48.1. Germany's services sector showed a mild improvement but still remained in contraction. Despite the slightly positive data, Euro USD moved lower as US dollar strength and broader market sentiment remained the dominant drivers of price action. The next important financial news was the unemployment rate in Canada. So let's discuss that. Now, what is unemployment rate in Canada? Unemployment rate measures the percentage of Canada's labor force that is unemployed but actively seeking work during the reported month. It is an important indicator of labor market conditions and overall economic health. A lower than expected unemployment rate suggests stronger employment conditions and economic stability, which can support the Canadian dollar and may push the USD CAD lower. A higher unemployment rate signals weakness in the labor market and slowing economic conditions, which can pressure the Canadian dollar and lead to upside movement in USD CAD currency pair. Now, the financial news event details. The unemployment rate in Canada, we got this news announcement on June 5th at 12:30 p.m. UTC time. The previous reading was 6.9, forecast 6.9. The actual number we got is 6.6. The currency pair to focus is the USD CAD currency pair. Now, let me discuss market context and pre release expectations. Canada's unemployment rate was expected to remain unchanged at 6.9%, matching the previous reading. This suggested stable labor market conditions, although unemployment remained relatively elevated compared to historical averages. A steady reading would indicate no significant change in hiring or labor demand conditions. Forex markets were closely watching this Forex news release for signals of improvement or deterioration in Canada's labor market. A reading below 6.9% would signal stronger employment conditions and support the Canadian dollar. A reading above 6.9% would indicate weakening labor market conditions and could pressure the Canadian dollar. Now, let me show you the price chart of USD CAD currency pair. Here is the chart of USD CAD. Despite the unemployment rate improving to 6.6%, better than both forecast and previous reading, USD CAD moved up after the Forex news release right over here. The price action showed a clear divergence between economic fundamentals and market behavior. Normally, stronger Canadian employment data would support CAD strength and push USD CAD lower. However, the market reacted in the opposite direction. Now, why USD CAD moved up? Well, there are different reasons. Number one is the strong US dollar demand across the currency market, rising US Treasury yields supporting the US dollar strength, interest rate differential favoring the US dollar, broader risk sentiment shifting in favor of US dollar, weak follow through buying in Canadian dollar despite positive data, market positioning and liquidity flows dominating the reaction. Key market drivers observed: unemployment rate improved 6.6% versus 6.9% forecast. The forecast was 6.9%. Canadian labor market conditions strengthened. However, US dollar strength dominated price action. Canadian dollar reaction to data was limited. Broader macro flows outweighed domestic data. Market sentiment favored USD CAD upside. Price action diverged from fundamental expectation. Technical and sentiment considerations. USD CAD maintained bullish momentum after the release despite positive Canadian employment data. This suggests buyers remained in control of the market. US dollar demand observed Canadian dollar positive news. Momentum traders continued supporting upside. Fundamental data had limited short term impact. Forex market focus remained on US dollar macro strength. This highlights that liquidity flows and US dollar sentiment can override single economic reports. Short-term bias is slightly bullish in USD-CAD. Continued US dollar strength may keep the pair supported in the near term. However, improving Canadian labor market conditions may provide medium-term support for the Canadian dollar if sustained. Currency traders should monitor US yields, Fed expectations, oil prices, and Bank of Canada policy outlook for follow-through direction. Overall analysis and key takeaway is Canada's unemployment rate improved to 6.6%, beating both forecasts and previous readings. This was positive economic news for Canada and normally would support the Canadian dollar strength. However, USD-CAD moved higher after the release as US dollar strength and broader market flows outweighed the positive Canadian data. This highlights an important Forex principle. Economic data can influence price direction, but it does not always override dominant macroeconomic and liquidity driven trends. The final key takeaway is the previous reading was 6.9%, forecast 6.9%. The actual number we got is 6.6%. Canada's labor market improved more than expected, signaling stronger employment conditions. Despite the positive Canadian dollar data, USD CAD moved higher as US dollar strength and broader market sentiment remained the dominant drivers of price action. Now, let me talk about current week's macro. Now, let me first take a look at previous week global market trends. Then we cover the current week. So let's take a look at euro dollar and US dollar Swiss franc currency pair. First one is the euro USD. This is where we got a break over here. This might turn into a false breakout and price action might go back up again. Here's the daily time frame, and this was the old support area right over here. This is where market find potential buyers, and I actually marked this zone, this buy zone over here last week that euro USD is probably going to move down and then rally back up. So it's quite possible that price action is going to keep moving up from current price area. If we take a look at 4-hour time frame, let me remove all of this. This is the 4-hour chart. Market is continuously rising up. So if we do get a bullish breakout above this zone, then obviously euro USD is going to rise up further. Otherwise, we might get another retest of this euro dollar support over here. Okay. Next one is the US dollar Swiss franc. US dollar CHF currency pair. The trend is down in a weekly time frame. Inside the daily time frame, USD CHF it did go up over here, and now market is kind of trying to move down. So in 4-hour time frame, let's draw the support area. So this is the zone right over here, and if USD rank is going to keep falling down and breaks below this support area, then expect further weakness in price action of US dollar CHF currency pair. Okay. Now let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the core CPI month over month in USA, and we're going to focus on euro dollar currency pair. Date and time is June 10th, 12:30 p.m. UTC time. The next upcoming important financial news event is the building permits in Canada, and the date and time is June 11, 12:30 p.m. UTC time. So let's start with the first one. Core CPI month over month in USA. Now, what is core CPI M over M? M over M means month over month. The core CPI month over month measures the change in consumer prices excluding food and energy. It is one of the most important inflation indicators in the United States. A reading above expectations suggests rising inflation pressures, which can increase the likelihood of higher interest rates. This is generally supportive for the US dollar and can push the euro USD to the downside. A weaker than expected reading indicates easing inflation pressures, which may reduce expectations for tighter monetary policy. This is typically negative for the US dollar and can support the euro USD to the upside. Now the financial news event details. The previous reading we got 0.4%, forecast 0.3%, actual data not yet released, but it is going to be released on June 10 at 12:30 p.m. UTC time. Now let me discuss market context and pre-release expectations. The core CPI is expected to ease slightly from 0.4% to 0.3%, suggesting a gradual slowdown in underlying inflation pressures. This indicates that inflation may be cooling but still remains above levels consistent with stable long-term price stability targets. Markets are closely watching this release because it directly influences Federal Reserve interest rate expectations. If the actual reading comes in above 0.3%, it would signal persistent inflation and could strengthen the US dollar. If the reading comes in below 0.3%, it would suggest faster disinflation and could weaken the US dollar. Now, why Euro USD could move after the news release? Let, let me discuss the key drivers for price action. That includes actual inflation reading versus forecast and previous reading, Federal Reserve interest rate expectations, US dollar strength, and Treasury yield movements, Eurozone versus US inflation divergence, overall Forex market sentiment, and risk appetite. Even small deviations in core CPI can create strong volatility because inflation data directly impacts monetary policy expectations. Now, let me discuss technical and sentiment considerations. Euro USD may experience sharp volatility during the Forex news release. A stronger than expected CPI reading would likely support the United States dollar strength and push the Euro USD lower. Well, the Euro USD it's already down over here. A weaker than expected CPI reading would likely weaken United States dollar and support the Euro USD higher. However, broader market positioning, risk sentiment, and Fed guidance may influence follow through beyond the initial reaction. Now, the trading outlook pre release. Well, the short term bias is obviously neutral because Euro USD it could revisit the support area or it might continue the uptrend. So upside potential for Euro USD is there if inflation comes in below 0.3%. Downside risk for Euro USD is also there if inflation exceeds 0.3%. Forex traders should expect elevated volatility around the Forex news release time as currency markets react to US dollar inflation uh, data and recalibrate Fed expectations. Follow through direction will depend on both the CPI outcome and the broader US dollar sentiment. Overall analysis is US core CPI is expected to show a slight cooling in inflation, signaling a potential moderation in price pressures. The Forex financial news release is critical because inflation trends strongly influence Federal Reserve policy direction, interest rates, and overall US dollar valuation. While the data will likely trigger short term volatility in Euro USD, broader macro factors such as Fed communication, labor market strength, and global risk sentiment will remain key drivers. Final key takeaway is the previous reading was 0.4%, forecast is 0.3%, the actual data not yet released. Euro dollar traders will closely monitor this core CPI release for confirmation of inflation trends in the US market. A higher than expected reading could strengthen the US dollar and pressure Euro USD lower, while a softer reading could weaken the dollar and support the Euro USD to the upside. The next important financial news event is the building permits month or month in Canada. Date and time is June 11, 12:30 p.m. UTC time. Now, what is building permits month or month in Canada? Building permits month or month measures the monthly change in the total value of new building permits issued in Canada. It is a leading indicator of future construction activity and overall economic growth. A reading above expectations suggests stronger demand in the construction sector and improving economic conditions, which can support the Canadian dollar and push the USD CAD lower. A weaker than expected reading may signal slowing construction activity and economic weakness, weighing on the Canadian dollar and potentially driving USD CAD higher. Now, let me discuss the financial event details. So we will get the news announcement on June 11, 12:30 p.m. UTC time regarding the building permits in Canada. The previous reading was 10.3%. The forecast is negative, it's minus 3.7%, and the actual data not yet released, but it is going to be released on June 11 at 12:30 p.m. UTC time. So the currency pair we're going to focus is the USD CAD currency pair. Now let me discuss market context and pre-release expectations. Canada's building permits are expected to decline significantly from 10.3% to minus 3.7%, indicating a sharp slowdown in construction sector activity compared to the previous month. This forecast suggests a cooling in investment and future building activity, which may reflect weaker business confidence and softer economic momentum. Forex markets are closely watching this release as construction data often provides early signals about broader economic trends in Canada. A reading above minus 3.7% would suggest stronger than expected resilience in the housing and construction sector, supporting the Canadian dollar strength. A reading below minus 3.7% would reinforce concerns about economic slowdown and could weaken the Canadian dollar. Now, why USD CAD could move? Well, there are key drivers for price action that includes actual building permits result versus forecast and previous reading, Canadian housing and construction sector strength, Bank of Canada interest rate expectations, Canadian economic growth outlook, US dollar strength and treasury yield direction, overall forex market sentiment and risk appetite. Construction data can significantly influence Canadian dollar because it reflects future investment activity and economic expansion expectations. The technical and sentiment considerations. USD CAD may experience increased volatility during the Forex news release. A stronger than expected reading would likely support the Canadian dollar and push USD CAD lower. A weaker than expected reading would likely weaken Canadian dollar and support USD CAD to the upside. However, broader US dollar momentum, oil price movements, and global risk sentiment may influence follow through after the initial reaction. Now, let me discuss trading outlook, the pre release. Short-term bias is slightly bullish in USD CAD currency pair. We can see market actually going up over here overall. The downside potential for USD CAD is there if building permits exceeded expectations. Like the expectation is minus 3.7%. Okay. The upside risk for USD CAD is there if data shows a sharper contraction than expected. Currency traders should expect elevated volatility around the news release time as forex markets react to Canadian construction data and adjust economic expectations. Follow through direction will depend on both the data outcome and broader US dollar sentiment. Overall analysis is Canada's building permits are expected to show a sharp contraction, signaling a potential slowdown in the construction sector and broader economic activity. This Forex financial news release is important because construction data is a leading indicator of future economic growth and investment trends. While the release may drive short term volatility in USD CAD, broader factors such as US interest rate expectations, oil prices, and Bank of Canada policy outlook will remain key drivers of the currency pairs. Final key takeaway is the previous reading 10.3%, forecast minus 3.7%, actual data not yet released. USDCAD traders will closely monitor this Forex news release for signs of weakness or resilience in Canada's construction sector. A stronger than expected result could support the Canadian dollar and push USDCAD lower, while a weaker outcome may strengthen the bullish case for USDCAD currency pair. Now, let us take a look at current week Forex market trends. First one is the Euro USD, then we have the Australian dollar versus US dollar currency pair. So, first one is the Euro. Regarding the Euro market, created a nice uptrend over here and a drop below this trend line. This might turn into a false breakout. Is the daily time frame. So far, price action bounced from the daily support area and currently it's moving back up over here. In 4 hour time frame, the trend is still down in euro dollar currency pair and a bullish breakout above this resistance area, this yellow color highlighted area is obviously going to suggest that market wants to go up. The Euro USD trend is going to turn bullish if we get a bullish breakout over here in 4 hour time frame of Euro dollar currency pair. The next one is the Australian dollar. AUD USD currency pair, nice uptrend going on in weekly time frame. And let me take a look at smaller time frame as well. Okay, this is the 4 hour time frame. So here's the zone. Here's the weekly time frame of AUD USD currency pair. In daily time frame, market showed a breakdown over here. Now this could turn into a false breakout as well. It's quite possible and market continue the rise, or another side is market could just keep falling down. The overall trend is down in 4 hour time frame. In daily time frame, this trend line suggests that we could get further upside or market is going to continue the rise. So to confirm that, go over to a 4 hour time frame and here's the zone. Now, if Aussie dollar currency pair is going to break above this yellow color resistance area, then expect further upside. Otherwise, Australian dollar is most likely going to fall further. Okay. Next, we have the US dollar versus Canadian dollar currency pair. So regarding the USD CAD, the trend is somewhat bullish in daily time frame of USD CAD currency pair. Let us take a look at 4-hour time frame. So this is the 4-hour chart right over here. So if market really going to change the trend, then any breakdown in price action below this zone is obviously going to shift the trend. It's going to change the market bias and expect further weakness in price action of USD CAD currency pair. The overall trend is still up in USD CAD if we take a look at daily time frame, but the trend could change if we do get a bearish breakdown in price action of USD CAD currency pair. Next, let us take a look at spot gold. Spot gold, the weekly time frame, the trend is up. If we take a look at daily time frame, it showed a little bit bounce over here and then dropped even further. So it's quite possible that market is going to rise back up over here. Let me draw a trend line. So in spot gold, we might get a bullish rally, but the way I see market just keep trying to create a pressure to the downside. It's also possible that we might not get such a bigger pullback. Maybe market just want to, you know, move up a little bit. And after that, expect further weakness in price action of spot gold. I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, feel free to type in the chat box. I will be happy to answer your questions. Okay, there's a question about what is divergence. Divergence simply means that as far as the indicator is concerned, we can apply an indicator over here. For example, this is the MACD indicator. And let me change. So the divergence simply means as far as the indicator is concerned, that price keep going in one direction and the indicator goes in an opposite direction. For example, over here market moved up, and if we check out the indicator just keep printing the highs which are lower than the old highs, whereas the price action keep printing higher highs and higher lows. So that's the divergence as far as the indicator is concerned. Okay, I think that's pretty much it. So what we have learned today? Well, we discussed about core CPI month on month in USA, and then we also discussed building permits in Canada. These are the two important upcoming financial news events that are going to affect the prices of Forex pairs. And then we looked at the EURUSD, AUDUSD, USDCAD, and spot gold. These are the assets to watch out for profits. What you should do next? Stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, June 16th, 12 p.m. UTC at the same time. That's all from my side for now. Have a great day and goodbye.